We sold into the rip today, team. What is going on, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is August 12th of 2022. Let's begin with our box scores and we'll dissect every dirty detail of this amazing rally that we had today. S&P 500 finished up 1.69% for the session. We had our NASDAQ QQQ finishing up almost 2%. Our IWM small caps actually did finish up 2.04%. Our dogs, the Dow, lagged behind the pack. They finished up only 1.23%. And our ARK Innovation ETF finished up a whopping 4.19%. We did get a volatility crush across the board, but I will say that the volatility remains bid. Volatility actually climbed back to about where it opened up towards the bell, and that is definitely noteworthy. We'll talk about that in more depth in a moment. Breadth finished out overwhelmingly positive. We had 86% advancers in the small caps, and our up volume finished out at 88.2%, but the trend model remains at a +1. It has not flipped to a +3. Finviz heat map, we can see that everyone was feeling the love today in the market. Nvidia was up 4.28%. Tesla was up almost 5%. Apple is basically at its prior all-time highs. It's just a few percentage points away. So today, in short, was just a furious rally. Sectors. Our top momentum sector is now the blockchain ETF. And we did sell off our HUT mining position. That was the largest position in my trading account. And I went full cowboy on it. I had almost like a 50% exposure in my trading account to HUT mining. Started off just very big and added to it 2 more times. Then the position just grew very quickly. So to be honest, when it comes to rallies like this, the market's advancing. Now the market's going parabolic. At some point, you just ask yourself, how good is good enough? You look at your trading account and you go, man, that's good enough for me. That's exactly what I experienced there. I was like, what would really upset me? If I lost the gains that I made. If the market keeps going up or whatever, that's fantastic. But yeah, today was kind of I see this as a gift. This was a fantastic rally. Semiconductors were up almost 3%. Biotech up 3.3%. ARK Innovation ETF up big. FinTech up big. The only loser for today was KWeb, down 0.38%. Style factors, the high beta style factors up 2.36%. Our small cap value was up 2.03%. And this is pretty crazy stuff. Look at the S&P 500. We're just having a very nice advance, right? And now the angle of ascent is starting to change. S&P 500 is approaching the 200-day simple moving average. That is up here at 43.25. Could we hit that level? We are so darn close. It really would not be that much of a shock. We are getting a little bit more extended away from the 5-day EMA, and we are pretty extended away from the 20-day simple moving average. But it does appear that market participants, they're really celebrating this positive news on the inflation front. And I don't really blame anyone for doing that. I mean, that's been the major reason for which the market has been super weak all year round. So it does make sense that, hey, maybe some big players, they start putting more capital to work now that we have at least some relief on that front. Do I think everything's good now? I think it's a little bit too early to say that, but it also makes sense that people would view this positively. NASDAQ. We do have a virgin point of control up at 14,000. But right now you can see we're way above this monthly value area, and we've already extended beyond this Venom R1 pivot. We're also at 2,000. I actually shorted this bad boy today. This thing finished up 2.01%. And oh my gosh, look at this. I mean, I posted about this a little bit earlier, and the angle of ascent is changing, team. So let me pull this up. Interpreting pictures is super important in trading. It's kind of funny. I'm a CFA charter holder. I have the FRM designation, worked at big institutions, whatever. And honestly, interpreting pictures is really the most important skill in trading. And IWM, look at the angle of ascent for the past, maybe 2 weeks. It's been pretty steep, right? This has been a really nice advance. Now the angle of ascent has changed, and this is more so going parabolic. And when things go parabolic, essentially what happens is really B and C players start entering the market, and they're doing so at poor trade location. So honestly, if you're entering the market today, it's what are your odds of getting stopped out? Pretty darn high. The 10-day EMA is pretty far underpriced. It's all the way down here at 192.4. 20-day simple moving average is all the way down at 186.52. And the way that it works, this is just human psychology, and it is recency bias, where whatever we experience, in the most near term, the recent past, we extrapolate that into the future. So in all reality, from June, we've rallied, let's say in these small caps, for example, from about the 170 level and even below that, maybe like the 165 level, all the way up to 200. So that's what, like a 10 to 15% gain. Now is when people go, the market's just going up. You can't stop it. You can't get out in front of it. Like, it's going up and it's going to go up even higher. That's when people start extrapolating into the future after such a big run. So for me, I did take down a lot of exposure today. And the reason being, just like, this has been a fantastic rally. And I've been doing this long enough to know that once you enter the parabolic phase of a rally, that's not the beginning of the rally. Let's put it that way. Usually you're getting towards the end of it. Maybe it just ends in a consolidation, and that would be amazing. The market consolidates and then just continues to advance. Sometimes it results in a pullback. So for me, it was important, hey, I don't want to lose what I have here. Like, we've really participated in this rally, so I took some chips off the table. So let's dive into my trades for today. Closed out the Toast common shares. I put these on in the after hours market. This was a power earnings gap trade, and I just saw like those buyers weren't just like surging in to buy the stock. So I closed this one out for $20.69. I had paid $20 and a penny. I was able to take a few percentage points out of the stock, and I held it for 6 minutes of clock time where the market was open. So I was like, you know what, taking that off. Market is definitely a little bit overcooked, and so had no problem getting rid of that. I also closed out of my HUT mining position entirely. Closed out 25% of it for $2.95, had paid $2.36. Closed out another quarter of the position for $3.20. Closed another piece out for $3.25. Then finally closed the remaining piece out of it for $3.36. I'd paid $2.36 for this. And I just wrote here, this rally's a gift, because HUT mining, I was really planning on holding this thing for quite a while. And my original target, and maybe it still hits this level, it's definitely possible. Original target was this 413 level, but I really sized into this trade. I entered this trade in multiple increments, and this was my largest position by far. At one point, with how quickly this thing advanced, it was more than 50% of my trading account. I can be very concentrated, and I just make sure that I never take a loss greater than 8%. If I take a 30% position, I take an 8% loss. That's very manageable for my account. There's no problem with that. But yeah, this position really just advanced very quickly. I mean, look at this. This is another pretty much parabolic ascent, and there's no saying it's not going to continue. But again, today when I looked at my balance, I just said, you know what? This is good enough. And I must say, one of our proprietary indicators at Pristine Capital, we have a VVIX risk model that flagged a signal today that really just told us we're in an overheat scenario, and the real signal is going to fire on Monday if it does end up firing. But I just took the liberty of, like, honestly, let me just piece out of a lot of this stuff. But you'll notice that the VVIX ended up finishing out the session in positive territory. So it really comes down to, like, which part of the move do you want to get? Do you want to get the meat of the move, where it's like very easy, or are you getting it now where like the VIX is not really budging on the downside anymore? VVIX is actually moving up as the market's rallying. The market's making a parabolic pattern. This isn't where like I want to be like, okay, now let me buy stocks. This is actually where I start scaling out, especially for my trading account. So yeah, the VVIX closed out 0.19%, and you can see it's been just kind of steadily grinding higher while the indices are grinding higher. What else did we do today? I actually took a short position in the market today. So I did add in the morning some September 16th 197 strike puts in the small caps for $5.37. Must admit, I added this very early, and the market really did just keep advancing at this like parabolic clip. Closed out the WWE January 20th 70 strike calls for $8.10. I paid $7.90. A very, very small winner, basically a scratch. And then throughout the session, I was adding to my put options. I added to the IWM 197 puts for $4.99. This was still a 1-star trade. This is as small as it gets for me. And then I went ahead and added and made it a 2-star trade. So I added again for $4.18. That was more so into the bell. I also had a very small VIX hedge, and I added to that position as well. So yeah, now in my trading account, all I have like, it was like 69.8% cash. I have a little bit of hedges, and that's really just if our signal works and the market takes some sort of tumble. And then I do have one common stock position that's left in the portfolio. And to be honest, it's basically like, hey, if the market rips another like percent or whatever, that's perfectly fine. Like, I'm gonna miss some of that, but that is okay. It's not like I'm gonna stop doing my scanning work or anything like that. Really all it means though is just that I'm locked and loaded. When an opportunity comes up, I can seize it. And it's not like, oh my gosh, I entered everything at poor trade location. Like now, if things go south, I got no more cash to deploy. I would imagine there's a lot of players out there now that are fully invested. Pretty much what most retail traders do is, they get more aggressive in the market the higher it goes. And then as the market goes down, they're just stopping out of all their positions. And basically what you're guaranteeing if you're doing that is that you have the most exposure to the market at the highs and you have the least exposure on the lows. And that's really not where we want to be. So let's take a look here and let's just check out some of these assets and what they did before we break. So for instance, Array, this was a really nice mover today at 9.34%. This is a name that some of the players in our group traded, which is a really good trade for them. So you can see this one. Yeah, this one reported really strong earnings, and this is definitely looking like a really nice long candidate. We did have some semiconductor stocks that were also moving to the upside. GFS, someone in our group also traded this one, had a very nice sequence in this name. GFS, this is the semiconductor stock that just got a partnership with Qualcomm. And honestly, I just feel like I've rung the register, so to speak. So now what's awesome is the market's moving very fast. It's very tough to make decisions, right? But now we get the entire weekend to analyze the market. So I'm going to be putting together our Pristine Capital weekend market analysis video where we take a top-down look at the market. And we're also going to be putting together our Pristine Capital weekend watch list video where we really just do a bunch of scanning and we put together a nice short list of high probability trading setups for the upcoming week. If you're interested in receiving those, go to pristinecapital.net and sign up. Other than that, that about does it for this market recap video. Hope you all enjoy your weekend. Definitely get some rest, some time away from the screens. We'll see you all next time.